So hello everyone guys and welcome back. New video. This will be about how to enter trades. I think you all tired of getting stopped out too early or watching the profit slip away. In today's video I'm going to break down exactly how to enter a trade, set your stop losses and take profit like a pro. By the end of this video you will have the confidence to approach any trade with a clear plan that protects your capital and maximizes your returns. And make sure you stick around until the end, because I will share a bonus technique that can optimize your stop loss placement for even better results. The first step to any successful trade is choosing the right entry point. You want to ensure what your entry aligns with a confluence of signals to increase the probability of successful trade. This could be a breakout, a red light touch, or a moving average cross. So let's move to my graphic example. Here you can see the different time frames: 1 day, 4 hours and 30 minutes. And to this simple example I will show you how to get confirmations of your trade, and after 5 minutes this video you will understand when you need to open the trade or when you don't need to do like that. So for example,
don't forget to subscribe my Telegram channel where I write my thoughts on the market, useful information about trading and post my trades. Have fun!
So now let's remember my algorithm how to enter a good trade. The first thing you need to do is go to the highest time frame and look for the different points of interest, for example VG, order block and our ways of your trading strategy. And after that you need to define the trend line. On the 1 day time frame, here on the 1 day time frame we has a bullish trend, and if we move to the lower time frame we need to look for the deals in the long direction, because we don't want to trade against the trend, and if we are trading by the trend it's a more profitable way of trading. So after how you defined your trend line and your point of interest, you are moving to a lower time frame. Here on the 4-hour time frame, on the 1 day time frame we mentioned 1 VG, but on the 4-hour time frame we has a different point of interest. For example, not 1 PVG what we get on the 1 day. For example, here we can see a VG, here is gonna be an order block, and here we have our point of interest zone what confirmed with several confirmations, and of course we are waiting for the break of structure for confirmation of our trend line, and only after that we are looking for the best place enter a deal. And in my opinion, place your deals only in point of interest zones. For example, like that, place the take profit near the end of your point of interest, for example under the VG or order block, and place your stop loss on the pools of liquidity. And only in this case, if you get a good amount of confirmations, waiting for break of structure, trading by the trend, and placing a good deal with conservative stop loss, with conservative take profit and good risk ratio, you are gonna be profitable in distance in the trading. But with a 4-hour time frame, it's not on the one what you need to do. Now we are going to 30 minutes time frame, and here we can see a lot of opportunities to enter the deal, because here we have several confirmations in one point of interest. For example, here we can see the VG break of structure, and it can be like that. Here we can see the retest, and after that we can open a good deal with a better risk ratio, because here we have a good look or good view of the all liquidity pools. And here the lower time frame you can analyze the better risk ratio you can get in this situation. Here we have more than 5 confirmations. If you lose one deal, you always can follow by the trend, waiting for its confirmations, follow the trend and open a deal. In our situation, when you get all factors you need to do, you need for opening a trade in your trading strategy. Always screenshots in good quality you can get in my Telegram channel in the link in the comments. So let's sum up our graph example. The first thing you need to do is going to the highest time frame, define your trend and look for point of interest zone. And after that, after you define your trend, you are going to the low time frame, looking for our point of interest in your previous zone of the higher time frame, and waiting for confirmations. For example, retesting of order block, testing free top setup, and confirming or breaking of structure. And after that, if you don't get enough arguments to open a trade, you are going to the lower time frame. Here you are waiting for the best ways of confirmations of your trade. Here you always can see more aspects for your trading, and of course on the lower time frames you can open deals with better risk ratio, because here we have more ways to place a good stop loss. So now let's talk about stop losses and take profits. Stop losses are essential for protecting your capital. A stop loss is a determinate level where your trade will automatically close if the price moves against you, limiting your losses. Place your stop loss at a logical point where, if reached, it indicates your trade that you is no longer valid. For instance, if you are trading a breakout, set your stop loss below the breakout level or below a recent swing low. Don't place stop losses at obvious levels like exact support lines where stop hunting might occur. Instead, give a little buffer space to avoid being prematurely stopped out. Take profits are equally important to maximize gains. You should see them based on the realistic targets for the line with your strategy. That is a specific risk to reward ratio on a technical level. Common take profit methods include setting them at the previous support resistance levels, Fibonacci retracement levels, or using a fixed ratio like 1:2 or 1:3 for risk to reward. If risk on trade is $100, aim for at least 200 or 300 in profit with a 1:3 risk reward. If you are using Fibonacci, set your take profit as a discount or a premium market, what I told in a previous video. Be prepared to adjust your profit when the market conditions change. Trading stop losses can help lock in a profit as the trade moves in your favor. So now we are on the BTC chart, and here with a 1-day time frame, we determined our trend. It's an uptrend with a breaking of structure and these meanings, and after that we are determined our point of interest zones. Here we have our order block, here order block with a huge zone for which we could open a good deal, and after that we are going to 4-hour time frame and analyze our deal. But what we can see here our first point of interest and the second point of interest, and after retesting the first point of interest, our order block zone, the price get reaction from it, and after that it's forming our FVG and order block zone, and after that in this price we can already open a good deal, but here with conservative stop loss and good take profit, and we could get a 3-to-1 risk ratio because here formed our FVG, for which we can open a deal and get a lot of money, because we saw on our confirmation since the point of interest for the higher time frames, and after that we get a reaction from one order block, which means that our uptrend continuing, and after that on our FVG format we can check premium and discount market, and after the retesting of the FVG we chart in the on our point of interest from the higher time frames, it's all the factors matched, and after that we can open a good deal with a good risk ratio with a conservative stop loss. So let's make it one more time, but for the 4-hour time frame it has a uptrend movement. We have mentioned our point of interest, FVG is here, FVG here, and it is gonna be one big FVG for the high time frame. We can mark it like that, move to the 30-minute time frame and see what we can get here. For this time frame we have one FVG water format on which you can open a good deal, and now one not so comfortable to open the deal, but if you enter on the beginning of this movement you can get a good profit in just 1 hour. So here we have our uptrend movement. We define our FVG zone here and waiting for a test lace. Our long deal is a catching of liquidity here with conservative stop loss above our FVG and get a good risk reward ratio. So thank you guys for watching. Follow all my links in the description, drop your likes, ring to the bell, subscribe to my channel, and goodbye.